How are we doing, sir?
Doing well. How are you guys? Thanks for having me on.
Yeah,
We're
thanks for
good,
coming
man.
on. Jacob DM'd us before. He's like, Alvin's coming on. He's one of my best buddies.
He's
Nice
so
get.
smart.
He's
Nice.
so
So smart.
smart. So we're excited to we're excited to talk to you. Even more so than before.
I was
Hopefully
excited
I live
before,
up
but
to it. Yeah, Jacob's great.
Yeah, so you're the co-founder of Ventuals, which is an on-chain derivatives platform enabling tradable markets around pre-IPO startup valuations on Hyperliquid. So it's obviously no secret that there's immense demand for access to pre-IPO companies. I think really the new thing you're doing here is betting that perps is the best market structure for them. So curious to kind of start there and dig into why you think perps is the right form factor here.
Yeah, definitely. So we spent quite a bit of time thinking through the various kind of form factors for getting people exposure to these pre-IPO companies. And I think before I go into why we chose perps, I would say that I do believe that these various form factors will and can coexist, and in some cases actually mutually reinforce each other. So we looked at of course tokenized versions of these stocks, perps, and then also prediction markets. And the main reason why we went to perps, I would say there's two. The first is that you have the ability to have kind of leverage baked in. People love leverage. We've seen this with the explosion in popularity with zero data expiry options, of course, perps and crypto as well. And just retail behavior has gotten more and more comfortable with leverage as the years have gone on. And then the second reason is because they're fully cash settled, synthetic. It avoids a lot of the issues that might come up with share transfer restrictions, and companies basically not allowing these SPVs that intend to kind of wrap the shares into tokens to acquire the shares. So we believe perps are a way that allow you to much more nimbly kind of list new companies as retail demand kind of comes up for them. Going to the part where I think they're mutually reinforcing, right? So I do think there's definitely a place for tokenized versions of stocks. I think I'm really excited about the future where there's native issuance of stocks on chain. I think that'll be a huge unlock. But with the way that as more stocks come on chain as tokens, it actually helps perps markets thrive as well, because market makers now have an on-chain native way to hedge when they provide liquidity on a perps order book. But yeah, we decided to choose perps because of the two reasons: leverage and just how fast you can list new assets.
Yeah, got it. I'm interested in digging into the market mechanics a bit. So I think my two big questions around this are kind of like how you attract enough sell side demand. Like my intuition says everyone's just going to want to be long these things, and then also how you handle the impact of I guess jump risk from this changes in Oracle pricing that happens when new fundraising rounds happen.
Yeah, totally. So we were quite concerned or just thought a lot about the kind of trader bias of being long only, and who's going to take the short side of this. What we've actually found, and the caveat here is, of course, we're in testnet. It's not real funds. We do think people are actually trying to make money. We have a leaderboard. People are trying to flex on the leaderboard, but we actually haven't seen that big of long bias on these markets. What we've seen in terms of the flows have been roughly 50%, 55% long. And so there is a little bit of a long bias, but it was actually a lot less than we originally kind of thought it would be. In terms of who would step in as shorts, just in general in these markets. You do have haters, right? We listed Clearly, and a big reason for that was a lot of people wanted to short Clearly. But the nice thing about having this having perps on an order book is that whoever's providing liquidity, whether it's us or market makers, they can just move quotes, right? And so eventually there will be a price where people will want to step in and short. And of course, then also funding rates, play a factor in that. When the mark price is above the Oracle price, shorts receive funding payments, and so that's an additional incentive to kind of take that short position. And then what was your second question? Jump risk?
Yeah, just around jump risk. Whatever. Clearly raised their last round at 100 million. Let's say they go do their next one at 600. Does the Oracle just jump from 100 to 600 and chaos ensues in the order book when that happens?
Yeah, it's a good question. So we designed our Oracle a little bit differently than how you would how most like kind of perp oracles work for like an asset like BTC, or like gold even. So we don't treat the off-chain spot price of this asset as gospel with this Oracle. So the reason why we don't sort of treat it as like the only source of truth for the price of this asset is because secondary like marketplaces for these assets are very thin. They're pretty low liquidity. Transactions don't happen all that often. When they do, they're not always in that big of size. And so we do believe that there needs to be some tie on the kind of perp market to this off-chain secondary marketplace, but it doesn't need to be tied at the hip like you would expect other types of assets. And so the way that we designed our Oracle is it's actually a blended weighting, 50-50 of what the first component is, this off-chain kind of valuation that is being seen in the secondary markets. But the other 50% is actually an exponential moving average of the perp mark price itself. So if you're familiar with how like Hyperliquid, did like the pump, pre-TGE perp, it's the exact same formula. And so there's this 50-50 weighting of, the off-chain kind of prices that are being seen in the secondaries as well. And then the other 50% being the perp. And so as the perp price moves, it actually pulls the Oracle price, and the Oracle price can and will deviate from the off-chain price if you think, or if the perp market, trades differently. And we feel validated in that decision. We made this decision actually before the Figma and kind of Circle IPOs, but we felt validated in that approach. When we saw the day before the IPO, like Circle and Figma were trading a certain price, and then the next day, as soon as it kind of hit the public markets, at like 3x, 5x, like instantly. And so we do believe that we can Ventuals and on-chain markets in general, for pre-IPO companies, can serve as venues for price discovery.
All right. Well, I'm very curious about Hyperliquid and HIP-3 specifically. What's the bull case there, and why'd you guys decide to build there?
Yeah. So, we as a team, just personally have been fans of Hyperliquid for a while, both in terms of the product and just like how they approach, how they've approached kind of building their ecosystem. When we started building Ventuals, we, weren't like hyper fixated on building it on Hyperliquid necessarily. We did evaluate, the wrapped, token version, the prediction market version, and the perp version of what this kind of product could look like. When we decided on a perps, we then did an exercise of evaluating like what the different options were, and what we kind of concluded was it is a tough slog to build perps infrastructure yourself. I think there's a lot of stuff that needs to be like really battle tested and bulletproof. And so one of the big reasons that we decided to build on HIP-3 was being able to leverage Hyperliquid's proven kind of order book margining liquidation infrastructure. I do think HIP-3 is going to be a game changer with just like the types of on-chain markets that are able to kind of come online. I wrote a post about that a couple of weeks ago that I can talk more about. But yeah, very excited about HIP-3. There's certain like requirements to building on HIP-3. And it's not like a absolutely perfect solution. There's definitely trade-offs, but we've been pretty happy with our decision so far.
I mean, I'm curious about maybe the TLDR on the post you created, because I think it's a big opportunity that people are going to be talking about.
Yeah, definitely. So I think in my mind, HIP-3 is kind of analogous to a lot of the like infrastructure that has been built up over the years for launching and deploying tokens and pools. I think like when you think about Uniswap v2, Pump, and other like Doppler, even like this infrastructure that's been built up over the years for being able to permissionlessly like create new assets in the form of tokens, deploy liquidity for those tokens, and have people be able to trade on them instantly. I think HIP-3 is the closest thing we have to that for perps. in crypto right now. There are certainly like much higher kind of capital requirements with like the HIP3, the hype stake that's required, and liquidity is not something that they solve for you. You do have to go find liquidity for the order book. But I think it's the first step in the right direction, where all of a sudden, like you don't have to have a ton of experience building an exchange to be able to launch a kind of a perp market. And so I do think, HIP3 and as, hopefully the capital requirements come down over time, which I personally think they will, there's lots of different types of markets that you can kind of create as a perp. And the really cool thing about perp markets is, all you have to do is bring, like, basically the gist of the post is to create a perp market, you just need to define the market, you need to kind of create an oracle, and then you need to pull in demand. Defining the market is just like, deciding what you want it to be. Pulling in an oracle is really just like any sort of data feed that you can get and like index. You just need a number that moves around, and on the demand side of things, you just need people who care about it enough to speculate and kind of hedge or otherwise get exposure. So you can create a perp on literally anything. Like we're doing pre-IPO perps. There will be gold and commodity perps. There will be like NASDAQ and like SPY perps. I think there will also be perps on like Google Trends and like maybe like user growth of like popular consumer apps and app store rankings, or like the price of a 5-star hotel in London on a Wednesday night. Like I think you could really any number basically that fluctuates, you can create a perp around it if there's sufficient demand and there's someone who goes out and like makes the market for it.
I'm curious what impact you think if this goes mainstream and kind of becomes ubiquitous, what impact this will have on maybe both the private fundraising market and even company building.
Yeah, totally. So, I think that if we are successful, management teams will demand their investment banks to use Ventuals, pricing information to help price the actual IPOs. So I do think that there's a lot of potential for on-chain markets that to basically serve as price discovery for companies that are not yet publicly listed. So I think that's kind of like the medium term end state. I think eventually we'll probably get to companies just directly issuing stock on chain. And that would be really fun as well. But I think if we're successful, like we want, in the same way that news, media, mainstream media will now, pull up Polymarket to kind of show odds of like stuff that's happening in real time. I do think that, if we're successful, people will see Ventuals as a place of true price discovery for these private companies.
So I'm really curious about the why here. Like, why are you deciding to invest your heartbeats in this? So, maybe there's an aspect of it being really cool and new, but my sense is there's something underlying this that is, like big and world-changing or impactful here that you're driving at.
Yeah. So I think, one of the kind of big reasons why we're excited about this market in particular is we just feel like it is the right thing to build. Over the last 20-ish years, companies have been staying private for way longer. Like in the 90s, like Amazon took 4 years to go public, which is crazy. And you have these companies, this kind of newer cohort of companies. The average now is over 12 years. It's between 12 to 15 years in the 2020s for kind of tech IPOs. And so there's this huge kind of like value accrual curve that happens in the private markets. At the same time, the venture capital as an asset class has ballooned 25x. It was $140 billion in AUM like in the 90s, and today it's like 3.5 trillion, right? And so like these companies are accruing massive amounts of, growing a ton in the private markets. Like normal investors have been kind of like shut out of it. And, we think that there's, especially with tech kind of becoming more and more part of the global economy, it's like, SpaceX and Tesla and OpenAI kind of making the news all the time. We think that there's a lot of interest from just everyday people in like all the technological progress that's kind of happening around them, but there's very few ways to actually get exposure. And so that's one of the reasons why we're super excited about it. I think the other reason is we felt like pre-IPO markets were actually one of the best to kind of bring on chain because the status quo is just so bad right now. If you try to get access, to secondary shares, you're probably like the third or fourth or fifth like layer deep into an SPV structure. There's like, between like 15 to 20% just fees on top, like without even any like kind of before you even start taking into account performance fees. So people that are trying to get exposure are getting raked, right? Like spreads are like super wide. There's not very much liquidity. And so we felt like, compared to the on-chain version, like there was actually a really, really big difference compared to say something like bringing gold on chain, because like gold is, very accessible already. And there's very deep liquid markets in TradFi.
Yeah, I love it. Oh, and last question before we let you go is, when is Ventuals going to get listed on Ventuals?
Yeah, we've been getting asked that. We should probably eat our own dog food for this, but I won't commit to any concrete date for that.
Yeah,
is there what's the hesitation there?
I don't know if there's hesitation. I think there's actually, it's just more that we have a pipeline of companies that we're excited about, and like, will probably appeal to a larger kind of audience. Like we do see, our demographic right now, it's mostly just kind of people who are already, very interested in crypto, but we sort of see our demographic as like anyone who trades on Robinhood and like reads TechCrunch, right? Or like listens to All in Pod. And so we do want to go after like quote unquote tech normies. You can see this in like our .com domain and things like that. And so we do want to go after the kind of like the most liquid, or like the most kind of like household names of private companies to start.
Love it. All right, man. Well, let's leave it there, Alvin. It's a fascinating conversation. I think, I guess I personally was rather shocked by the excitement around some of the early stocks, like stocks on chain attention that happened. I guess what are we, like a month, two months ago?
I mean, public market stocks on chain is like, okay.
Yeah, it just felt like the excitement on the timeline was far greater than I would have expected, and there wasn't something truly new and novel happening there. And yeah, I agree that issuance on chain is probably the big unlock and end state here, but it really opened my mind to a bunch of really fun dynamics that I think Ventuals will bring to the market here. That I share in the why here. I think the idea that I couldn't participate in the early days of Twitter and YouTube, even though I was so certain they were going to take over the world. And even today, I look at Stripe and Stripe Chain coming out. It's difficult for me to feel a whole level of connection and excitement around that beyond like the industry shift that it's driving. But I know that if I get to get some exposure to it and feel part of owner in it in some way, that changes quite a bit. So yeah, excited to get in. Are you guys on testnet right now, or how do people get in and start playing around, and how can we get in? Is, I guess, my core question.
Yeah. So we're on testnet right now. We're waiting for the HIP-3 standard from Hyperliquid to go live on mainnet before we can deploy on mainnet. But the testnet app is fully functional and it's fun to use. So you just can go to ventuals.com and log in, create an account through Privy, and you'll pay $1 in like Ether or USDC to get testnet funds, and then you can go wild.
New leaderboard for me to hopefully climb to the top of rather than the bottom of, like we did with our dear friends at Narrative. Yeah. All right, Alvin, best of luck, man. It's going to be exciting to watch your journey. Thanks for sharing it with us today.
Thanks, Jess. Thanks, Josh. Appreciate you having me on.
See you, man.